What's going on YouTube? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be talking about liquidity concepts, strong versus weak, highs and lows. All right. This is going to be very, very important for the main fact that understanding the difference between strong highs versus weak highs, strong lows versus weak lows is what's going to overall assist you with knowing where to target, where you're anticipating price is going to run, all of that good jazz, really. I mean, really, it's just understanding where the market is going to go, like at the end of it. Like, there's no fancy way in putting it. Understanding what's strong and what's weak is going to show you beforehand what the market is going to do. All right. Now, before we actually move into strong versus weak highs and lows, you need to understand basic liquidity concepts. So, you have to understand where's liquidity resting within the market. Okay, so there are three different versions of where liquidity is resting within the market. Okay, per version there are two styles, a buy and a sell, and we're going to go over all of them. All right, before we actually get into strong versus weak highs and lows. All right, so when you're within an uptrend, or when the market is pushing to the upside, okay, there's always going to be three different types of liquidity within the market. All right, there's going to be double tops. Let's move this here. Let's switch these around. Let's do the old switcheroo. Here we go. Okay, so you're going to have liquidity resting above highs, liquidity resting above double tops, and then of course you're going to have trendline liquidity as well. Okay, so trendline liquidity is going to look like this. Okay, and all of this is if you're trading liquidity, all of this in your mind should be what not to do, right? Like all of this is retail type of liquidity. You really don't want to be near retail liquidity, because what the market does is the market instigates. Okay, there are some people that say, oh, the market did stop hunt, the market took me out of my position. No, that's not what happens. What happens is there's certain patterns that show within the market, right? Like let's say price does something like this. Okay, there's certain patterns that the market shows that show us what we should do next, right? So we'll see this as a change of expectational order flow, and then we'll be looking for sells, right? Whereas if the market does something like this, right, there are individuals who will look for sells, right? The breakout traders looking for this to break, they will look for sells, but we will not, because we're anticipating that the market is going to run on these highs, collect this liquidity, and then push to the downside, and then we take our entries here for price to move lower, right? So understanding what's weak, what's strong is really going to assist you guys with understanding what to do within the market when you see a certain scenario being presented. So these are all for, let's actually switch this, my bad guys. So we will do a downtrend for this area here. We'll move this over right here. All right, and we'll do a downtrend here for trendline liquidity. Perfect. Okay, so above highs, you're going to have liquidity or orders resting. Above double highs, especially, you're going to have liquidity above resting. And then trendline liquidity at your lower highs as well. Okay, all while understanding that at each individual lower high, you also have liquidity, right? So it's almost like a double whammy whenever you see trendline liquidity. What I would do in order to take advantage of trendline liquidity, I would wait until price does something like this, till we see a change of expectational order flow, and then price trades back down to some type of supply or demand. Well, in this case, it would be demand resting here. All right, that's kind of what I would look for personally. Just as a little tidbit for anyone who does like to trade breakouts on trend lines or anything like that, that's just some information based on liquidity that you guys can take advantage of. All right, and then of course for sell positions, we will have things like this, or buy positions, excuse me. Oh. All right, you'll have liquidity resting below this low. You'll have liquidity resting below these double lows, or double bottom, equal lows, double lows, equal lows, excuse me. And then of course, your higher lows on trendline liquidity continuing to break structure to the upside, okay, and still respecting that trend line. That's going to be very, very important for you guys to pay attention to, because the more price moves to the upside and respects higher lows, the more liquidity that's built below those lows. All right, that is something to keep in mind, to understand, because let's say we have orders resting below this low here, okay? Price moves to the upside, okay, now we have orders resting below this low here, okay? Price moves to the upside. As you can see, we continue to stack orders, right? Like there are still a lot of orders resting below all of these lows, and what happens is price will instantly, whenever it's ready, right? Like let's say supply respects right here, okay? Price will usually tear through all of this demand here, all these orders resting here, just to trade back up and then continue pushing to the downside, right? That's normally what happens. As you guys can see, even with the Bitcoin example that has taken place this week, pretty much on Bitcoin, if you guys go check it out, today is September 9th, 2021. So if you go check out Bitcoin around this time, you'll see that we had so many days of bullish price action, right? And then all of a sudden, right, we had orders resting below all these lows on Bitcoin on the H4 time frame, right? And then all of a sudden, within a couple of hours, price took out all of the price action that took place over the past, I want to say like between 15 and 20 days. I don't know the exact number. I didn't actually count, but it took out all the price action over the past couple of weeks, just with one move. That is because we've had so many orders being stacked on all of these higher lows, okay? We had a change of expectational order flow after liquidity was grabbed, and now price may continue to push to the downside. We have to see what happens, of course, right? We don't want to do too much speculation because, you know, Bitcoin could easily touch 100K very, very quickly, but it could easily, you know, touch 25K just as fast, right? So those are some things that we have to keep in mind. So understanding what's the difference between strong and weak lows. Now I'm going to use my marker, okay, to do all of this. Now that you guys understand that orders are resting above highs and below highs, it'll make it very, very, you know, straightforward to go ahead and finish this out. I don't want to make this video too long for you guys. So strong and weak highs. When price is trending within a downtrend, what do you guys think is actually strong? Do you think the lows are strong, or do you think the highs are strong? All right, let me know what you guys think. I'm going to give you guys like 3 seconds to answer that. 1, 2, 3. Okay, hopefully you said that the highs are strong. Absolutely, okay? The highs are strong simply because supply is in control, right? That is why the highs are strong, because supply is being responsible for taking out demand, okay? And then on the lower time frame, we would have some type of reaction here, okay? So some type of supply would be pushed into the market right before the demand is broken, right? And then of course, price trades right back into the supply. It doesn't quite hit the extreme, but that's completely fine. It trades into the reaction and then pushes to the downside to take out demand again. That is very, very important, guys, okay? When you're within a downtrend, you expect your highs to be strong and your lows to be weak, okay? What this means is your highs are going to be protected and your lows are going to be targeted, okay? So that's what that means. Let's now flip it and let's look for the opposite. If price is trending to the upside, okay, liquidity concepts, what are you anticipating? You understand that there's liquidity resting below these lows, and you understand that there's liquidity resting above these highs. Now, is there more liquidity resting above the highs, or is there more liquidity resting below the lows? Right? That's the question that you have to ask yourself. Who is in control? In this case, if price is trending to the upside, okay, your highs are going to be weak. Okay, if we're in an uptrend, your highs are going to be weak, and your lows are going to be in control. okay, or protected, or strong. All right. Now, how do you take advantage of this? How do you take advantage of strong highs, weak highs, strong lows, and weak lows? If price is trending to the upside and you're seeing that your lows are consistently being respected, okay, you're gonna play price off of this, okay? If I see that, okay, there's supply resting above this high, we know that, right? There are orders resting above all the highs, there's orders resting below all the lows, right? We know that's a fact. So if we see that price takes out this high here, extends to the upside, okay, this high is weak because price trades through it. But what is strong? Wherever the demand is resting that caused price to trade through the supply or the weak high. Okay, that demand is where you're going to be anticipating a lot of strong pressure. Okay, you're going to be anticipating strength. You're going to be anticipating a lot of buying positions taking place here, which should cause the market to then continue to push to the upside and fail the next high, which would be here. Okay, so that's kind of how you play off of it. Now, I'm not going to go into too much detail because this is a concept that I go over in depth with my students, understanding strong highs, strong lows, weak highs, and weak lows. Okay, but if we draw up an entire schematic, okay, I want to also show you guys how to know the switch. Okay, if we draw up a schematic, we can see that our lows are consistently being taken out here, here, and here. Okay, normally what price is going to do, which it has done on Euro USD this morning, but it just did it from the buy to the sell, but currently here we're going to do the sell to the buy. All right, normally what price will do, it'll push to the upside. Okay, it'll create a high, a lower high, right? And then this lower high is supposed to take out this low, right? Like that's the expectation. But what will usually happen is when it's ready to switch, price will pull down here, right? And then you'll see it kind of ranging here. If you see that take place, yes, price can still push to the downside, right? But basically that should give you some type of sign that price is losing strength, right? Because we're not really supposed to see this small area of consolidation before the break. What we're supposed to see is, if we see a reaction, that's fine, but we're supposed to see price travel through. Okay, we really don't want, an area where price is, gathering orders. We don't really want that before the break. We want price to trade straight through. So normally what happens is you'll see price travel back down here. It won't necessarily break this low. It may come close. It won't break. And then you'll see this here. Okay? You'll see a break of this previous lower high that formed. Now, you're going to have to pay attention to what the previous leg of price did. If we did break this low, okay, then you can look for this break right here, and then you can take buys on the next leg or the next pullback. Okay, because expectational order flow has switched now, right? If we break this low, if we don't break this low, like here we did not break this low, you cannot take advantage of this minor structure break, right? Because this is minor structure. Why is this minor structure? Because this lower high did not break this weak low, right? So this low right here now somewhat becomes protected. Not 100% of the time because it's not, we don't have any confluence yet, right? But this low becomes somewhat protected. Now, what you're really going to want to pay attention to is let me draw this back. What you're really going to want to pay attention to is what does this low here do? Okay? If it breaks minor structure, which is here, fantastic. That's great. Okay? This becomes a strong low. This high now becomes weak. But what has to happen is we have to see what the demand here does next, right? So if price pulls down to this demand and then pushes to the upside and takes out this structure here, now we're looking for buys. Now you can look for confirmed buys. Now you can take buys here. Okay, it'll be risky, but you can take buys here. Taking buys here would make no sense at all. It's the same thing as trying to take buys here, same thing as trying to take buys here, same thing as trying to take buys here. Now I know what you guys are saying. You guys are going to say, but at these lows here, there are there are order blocks? Why can't we take buys off of the order blocks? Because you're going to end up taking, if you're risking 1% per trade, you're going to end up taking a minus 1% here, minus 1% here, minus 1% here, right? Yes, if this trade does play out and you gain 5%, then you wipe out all of your losses and you're up 2%. But why do that? Like, why lose all of that money if you don't have to? Why not just wait for your confluences to play out? And then what you can do is you can take a risky buy here after your minor structure has broken, right? Because we're transitioning from, let's say, if this were the higher time frame, we would transition from this right here would be minor structure. We would transition to substructure, okay, back into back into substructure after we have this minor structure break, okay, and then back into minor structure. So you'd be taking advantage of the transition from minor to substructure to hopefully break swing structure and create new highs, right? That is the anticipation behind this entire schematic. While understanding liquidity concepts, right? Understanding where's the money. We have money resting below these lows, above these highs, you know, things like that, right? And understand that, you know, your supply that price is going to react to is going to come from your internal liquidity that price previously created, right? So when price moves up here, I'm expecting price to push back to the downside, react to this area, and then blow through. Push up here to this supply, react to it, move back to the downside, probably push it to some more demand, and then push through, right? My anticipation is that all of these lows here are going to be protected, and they're going to be protected, which means that they're going to be what? Are they going to, if they're protected, are they weak or are they strong? They're going to be strong if they're protected. If they're going to be the targets, which once we switch to the uptrend, all of these are now targets, right? Are those highs going to be weak or strong? If they're targets, they're going to be weak, right? So those are some things to also keep in mind. And we're anticipating that these highs are going to continuously, the supply at these highs are going to continuously be taken out, and the demand at these reactions, or the demand at the extremes, the extreme would be here, the reaction would be here, are going to be respected. Okay, that is our anticipation. And then price pushes down and then pushes back up. All right, so this is basically how you differentiate between strong and weak highs while mixing them with liquidity concepts, right? I would not just pay attention to strong and weak highs. I would also understand where's the money lying, where's the money flowing, things like that. This is when you can start to incorporate, at strong and weak highs, you can start to incorporate your order blocks, right? So at strong lows, right, you're going to be looking for bullish order blocks. At strong highs, you're going to be looking for bearish order blocks. Okay, that is a gem that I just gave you guys. Don't sleep on that gem. Don't sleep on what I just said, right? Please don't sleep on what I just said. Go to the charts, start backtesting, start figuring out what you can see. If you guys do have any questions, of course, always contact me, right? Plenty of you guys do. Plenty of you guys contact me on Instagram or on Telegram and say, hey, I have a question on this, this, and that. How does that play out? How does that work? Now, I won't give you guys any information that is proprietary to my mentorship program and my mentorship students, especially when it comes down to entries, because anyone can set an order off the H4 time frame and flow with the market, right? But not everyone can go down to the M1 time frame, risk 2 pips on a trade, and allow the trade to, you know, gross them 10, 15, 20, 18%, things like that, right? That is where the real sauce comes in, on the lower time frames. But this is a schematic you guys can use on the higher time frames. Start to look for your weak lows, targeted highs, strong lows, and targeted lows, things like that, right? Just start to look for them, see what you can find, see what you can see, and then, of course, reach out to me if you guys have any questions. With that being said, if you guys aren't a part of the, if you guys are not a part of my YouTube family, excuse me for the tongue twister, feel free to subscribe. Leave a like on this video if this content assisted you in any type of way, okay, with understanding the market, you know, more efficiently, more effectively, anything like that. Leave a like on the video, much appreciated, and I'll catch you guys on the next one. Peace.